Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock with news that currency markets, bond markets and equity markets all react to unexpectedly strong US data releases overnight, much of it sceptical. In fact, we're getting rising risk aversion questioning its believability. US initial jobless claims came in last week at just over 180,000, with 1.728 million people on these benefits and still 100,000 more than at the same time last year. And new orders for manufactured durable goods rose marginally in August from July, following 2 consecutive monthly decreases. That puts them a good 5.4% higher than year-ago levels. But non-defence, non-aircraft capital goods orders were low in the month, up just 1.6% from a year ago, and it seems clear boardrooms are not enthusiastic investors at this point. This data is far more positive than the regional Fed factory surveys are picking up, so we'll need to wait before we conclude reshoring is actually happening. And the September factory survey from the Kansas City Fed described only very modest changes in factories in their region. Order backlogs reduced, as did new orders for export. In fact, US exports fell 1.4% in August in updated trade data, while imports fell 5.6%. But the final US GDP result for the June quarter came in with a huge revision higher, up 3.8% from a year ago. This was apparently driven by a decrease in imports and an increase in consumer spending, offset by decreases in investment and exports. There was a one-off revision to the consumer spending data in this release, which twisted things somewhat. Again, this data is hard to reconcile with the real-time high-frequency data that we saw in the second quarter, but this is what they're reporting. If the Fed accepts this GDP data, rate cuts there are likely pushed further away. And perhaps we should note that the Swiss central bank left its policy rate unchanged at 0% in an overnight review. Switzerland has inflation running at just 0.2%. And container freight rates fell faster last week, down 8% for the week, to be a massive 55% lower than year-ago levels. And it was again outbound rates from China that is driving this retreat. The US Treasury 10-year yield is now at 4.17%, up 2 basis points from yesterday at this time. And the price of gold will start today at $3,739 an ounce, up just $6 from yesterday. But silver is on the move again, approaching $45 an ounce. And American oil prices have little changed at just under $65 a barrel, while the international Brent price is still just over $69 a barrel. But the Kiwi dollar is now just on 57.6 US cents, down another 50 basis points from yesterday, and its lowest level since mid-April. Against the Aussie, we're down just 10 basis points at 88.2 Australian cents and near a 3-year low. But against the euro, we're actually unchanged at 49.5 euro cents. That all means our trade-weighted index starts today at just over 65.2 and down another 30 basis points. You can get more news about the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.